Hey guys, what's going on? In this video or webinar, we wanted to show you guys, and we'll probably do webinars in the future where they're live. I think we just started the Crypto Somniac Advantage, so there's not a ton of people in it yet, but we'll probably do 1 or 2 webinars a month where you guys can actually ask some questions live, kind of like YouTube, but private, just us involved. We can do that in the future, which we used to do for the old group, but we'll wait until there's a little bit more people in here. But we wanted to go over this portfolio to catch a couple people up, how we got to our current portfolios and what they currently look like, and some things that we'll be adding or just look to add, and how we treat our portfolios in the future. We've allotted, kind of what our portfolio looks like in a chart. And of course, whether you're high risk, medium risk, or low risk will, depend on you as a person, and you can allocate and shift things as you want. Namely, probably your investments in Bitcoin and Ethereum determine typically how risky you are. So
absolutely, and this is a very important strategy to use. And I think portfolio allocation, should not be overlooked by anyone. I think specifically, it's almost as important as investing in particular cryptocurrencies, and just to make sure that you're not over leveraging yourself on any one particular category or sector of the market.
So let's go to slide 1. So you can trade as frequently as you want. You could trade never, like a grandpa, or you could trade a lot and trade like penny stocks and probably lose a lot of money, or you can trade anywhere and everywhere in between.
Right.
Once a day, once a week, once a month, and that will determine. That's always up to you to decide. You can.
In all honesty, the volatility of the cryptocurrency market, if you can outlook at least once a month or like 2 times a month, I honestly would not suggest going all in on cryptocurrencies or anything like that. Even for us, it's a particular position that we are in. We also have traditional stocks as well. Don't get us wrong. We have the 401k IRA as well, but your frequency of trading has a lot to do with your risk management of your overall portfolio. And so we just thought this would be a nice little representation of how different traders act, and what's short term for me could be long term for somebody else. Or sorry, what's long term for somebody else is short term to me. Considering we do this full time, so we have to take in considerations of everybody really doing that.
So if there's a couple coins that you could probably invest in and never look at, like Bitcoin or Ethereum, but most coins or cryptocurrencies you should probably look at and have a portfolio that you can look at least every couple days or weeks. There's portfolio trackers we're adding ours to our website soon, so it should be very easy to at least quickly glance at as an app on your phone, Blockfolio, our app in the future, websites, etc. So it's not something you have to spend a ton of time on, but depending upon how frequently you like to trade will determine how much time you have in all this. So definitely worth considering. And your risk portfolio. So I think the biggest assessment of risk is how much you have invested into really the big 3, which are all carried by Coinbase. I know Coinbase isn't available for everyone in the world, but at least in the United States, Bitcoin, ETH, and Litecoin are big 3, and there's a lot of ICOs actually that have reserve funds that invest their reserves into Bitcoin, ETH, and Litecoin. So I think it's agreed upon that they're probably the 3 stablest coins of all in cryptocurrency. I'm sure there's a lot of others as well, but they're seen as 3 of the stabler ones. So depending upon what your ratio is in those specifically will determine your risk, because they are seen as the 3 that probably will be here for quite a while and pretty safe investments all around.
Overall, when we talk about risk profile and volatility, Bitcoin is still wildly, and Ethereum, Litecoin, everything's wildly volatile. But volatility is what basically gives you that nice profit loss that you're looking for. And these 3 are notoriously stable. Take that with a grain of salt, and not as volatile as these other cryptocurrencies. Lower on the market cap. They're just higher on the market cap. They have more awareness. They've been around for a long time. Again, take that with a grain of salt, because everything's basically 8 years or newer. Right? Specifically, Bitcoin, only created in 2008.
So you could probably even a step beyond this be like ultra low risk and only invest in Bitcoin, ETH, or Litecoin. Essentially, my father is, and there's probably a lot of other people. They only invest in what was available on Coinbase, and of course, we think that's very low risk because we do believe there's a lot of other good cryptocurrencies that will be around, and we know some will be around. We don't know for sure which ones, but there's a lot of other opportunity. But depending upon how risky you are, we feel that 50% into Bitcoin, Ethereum, and Litecoin would put you at about an average person of risk. Anything lower than that is probably high risk, and anything above that is lower risk. And that is really the biggest decision I think most people have to make when they are investing into crypto and altcoins. It's how much you want to be invested into Bitcoin, ETH, and Litecoin versus the rest, because essentially all the other ones are basically altcoins. You could consider these three as pretty good staples, and determine depending on how much you want to leverage yourself into the other positions will basically determine if you're a riskier, a low risk, or a medium risk. So
absolutely,
I think that's pretty clear. Diversification. So
we always talk about this, and obviously the higher large cap coins such as over $1 billion, USD valuation, we think that's relatively stable, but you want to take a healthy amount of risk, and I think it's good to spread around your portfolio if you are taking that higher risk. Like we said, Ethereum, Litecoin, and Bitcoin, they're all well over $1 billion. I mean, they haven't been under $1 billion for a while now. And we just wanted to go over that. It's healthy to pretty much take that healthy amount of risk. These newer cryptocurrencies, these smaller cap coins, because the smaller cap coins do have larger volatility than the larger or medium cap coins, and and one of the big things that we wanted to touch up on is proof of work versus proof of stake.
So you could probably even invest after, large cap is obviously Bitcoin, Ethereum, and Litecoin, and a number of others, but it's also worth seeing how much money you have invested into large versus medium versus small, which is similar because we considered the large caps, again, the ones that we covered in the previous slide here. Mm-hmm. But if you are, it should be important to note, are you, 33, 33, 33 in all, or are you 80-20, or are you, 60-20-20? What is your split? And it should be worth noting. And we think large cap coins is anything over $1 billion. The top 20 to 30 on the list are relatively safe and good investments. And in between $1 billion to 300 or so, anything on the first page or two of coin market cap is above that. And then anything below that is a small cap. So you want to have a good balance of both. If you're low risk, maybe that balance is 80-10-10. If you are higher risk and younger, maybe it's 25-30-30 or whatever adds up to 100, and anywhere in between. And then it's also worth noting how much you have in proof of stake versus proof of work. So a lot of platforms, a lot of cryptocurrencies are one or the other. And we're seeing a shift from a lot of proof of work coins to proof of stake, and ones that can be ones that are converting in the middle of to proof of stake. Ethereum, for example, is moving to proof of stake. Right. Though there are advantages and disadvantages to both, I think a lot of them are moving to proof of stake. But proof of work still isn't bad. The biggest issue with proof of stake is that the rich get richer, and meaning that the consensus algorithm revolves around how much token and stake you have on the network, which creates the rich get richer issue.
Right. I think there's a whole ideological shift right now in the whole crypto currency paradigm. Proof of work is obviously the first. Bitcoin is proof of work. It's the first algorithm that really came to fruition using blockchain technologies. You're putting in work, you're putting in electricity, you're putting in hardware costs, utility costs, time, effort, to pretty much mine these cryptocurrencies, and that gives it a sense of legitimacy behind it. You're not generating these cryptocurrencies out of thin air, and I think institutional investors, specifically, institutional investors, I think they value that a little bit better than proof of stake. Like, honestly, I could go out and make a proof of stake coin right now, and what would it be worth? It'd be pretty much be worth what the team is set out to do, right? And all the investors and the VCs think that it's worth. So I think proof of work gives it a sense of legitimacy, and I think there needs to be a healthy balance between your portfolio, between those two.
And Bitcoin obviously is proof of work. Ethereum is switching to proof of stake, and then there's some other cryptocurrencies as well, obviously, that are one or the other. So it's worth noting in your portfolio which cryptocurrencies you have that are proof of work and which ones that you have are proof of stake, and just creating a good split between the two. And then furthermore, it's worth categorizing your cryptocurrencies into certain categories. You want to have a healthy balance between all of them, and I think it's no secret that a lot of us prefer the platforms, and that's reflected on CoinMarketCap. 20 to 30 out of the first 40 or 50 are platforms, and we'll show you on the next slide kind of what we have as a balance between them all. But there are a number of different ones. You have currencies, you have payment processors, privacy, decentralized exchanges, platforms, niche use cases, supply chain management, marketplaces, and you could further categorize probably many other sectors, social media,
so gambling, cloud processing, cloud computing, cloud storage,
lending, ton of different things, and it's worth probably having a little bit of money in all of them. Stick to certainly what you know and are more comfortable with. I know Sneh and I don't really invest into many gambling or lending type of platforms, on rare occasion maybe, but typically it's also good to stick to with what you know. So it's good to take healthy risk and balance yourselves into these different categories. But if you don't know a single thing about supply chain management, it may not be a good idea to get involved in supply chain management cryptocurrencies.
And the market's pretty beautiful. Just to think that privacy coins, when there's an exchanges being banned or transactions being halted due to government regulation, you'll see all the privacy coins rise together. So that's why we really broke it down to categories. And for example, if there's again like exchange bans, you'll see decentralized exchanges all rise together, like we saw for the China FUD or the Korean exchange ban FUD. All these boats rise together and they sink together almost accordingly. If you see Monero rise, you'll see things like XSpec and Stealth Coin and Zcash and a lot of other privacy coins really rise together and fall together.
And you'll see that in other platform or other categories as well. Decentralized exchanges, marketplaces, they all will ride commonly together. And it's good to diversify because of that, because if one set of them is going down and you're only invested into privacy and privacy is all doing very poorly, meanwhile platforms are doing great, then you aren't making any money. So you want to make sure you're spread across some of them. Of course, if you don't have a clue as to what one of them is, maybe you stay away from them. But it's good to take not risk, but it's good to diversify rather into these different areas that you have.
Right. So there's a lot of different aspects, whether it be large cap, small cap, proof of stake, all these different categories. And this is a small example of what our portfolio allocation really looks like. And Sam and I, we do this essentially full time, so we're able to take a little bit higher risk because we are monitoring it essentially real time. This is pretty much what our portfolio looks like. And we added another category here into this portfolio allocation. It's called ICO and high risk. We don't suggest more than a few percentage of ICO and high risk, pretty much investment, but they do give you the best return on investment, right?
Potential for return.
Exactly.
I think if you're ultra high risk, I don't think I would advise going anything beyond maybe even 20% into ICOs. I think that is at the very far end of the spectrum. If you're anything above 20, we probably just think you're crazy.
No, yeah, crazy. It's super speculative. ICOs are essentially gambling. They haven't been established. There's if a leader of an ICO pretty much falls off the map or something terrible happens to him, you could see that project completely disappear. And I think Sam and I have both invested in cryptocurrencies or ICOs that have not panned out. I mean, there's kind of an ICO pandemonium right now. Like everyone's trying to get into ICOs because we're teetering to that ICO bubble level. I don't think we're anywhere close to a cryptocurrency bubble, but ICOs specifically, I mean, there's just a lot of speculative.
There's a lot of government regulations and regulation in general that will take place this year, and they will be less and less of a thing, and they're actually becoming much harder to invest in, especially if you're in the U.S. Almost no opportunity to invest in them if you're an average consumer here in the United States. And it was only going to continue to probably get harder, more regulated, and probably will start to dry up as we move forward to and into the rest of the year.
Right.
So ICOs are very speculative. We try to do research on which ones are worth looking at, and even if they're in ICO stage, it's always good to watch it after it comes out, see how it rides. We didn't get to participate in some of our most successful investments as an ICO. Many of them were purchased after, and in some cases long after ICO stage. Our first purchase of Ethereum was at the $5, $6, $7 mark, and that was almost a full year after it's been out. So there's still plenty of opportunity even after cryptocurrency comes out to invest. Here is an example of a portfolio of close to what our portfolios look like. Of course, we don't share the same exact portfolio, but we are, again, pretty heavily invested into mainly platforms, and that is the bulk of our.
Yeah. And when we say platforms, I mean things that you could build dApps upon. So things like Neo, Cardano, EOS, Qtum. Of course, Ethereum is a platform, but Ethereum is one of those. It's in that category where it's no longer approaching altcoin range. I honestly think, I think we've both stated this, that we don't really consider Ethereum, it's such an integral part of cryptocurrency that we don't even consider it an altcoin really that much. I mean, it is an altcoin if you're a Bitcoin maximalist, but it's approaching that level where it gets its own category.
And Bitcoin and Ethereum is off on its own. And again, depending upon how risky you are, if you're really young, you can have a lot less Bitcoin and Ethereum. And I think there's a lot of cryptos that will outpace Bitcoin and Ethereum in the short term and may or may not be here around. So that's the riskier part, may not be here in a year or 2 years. So you may want to be able to trade more frequently and watch them in case anything bad happens or news comes out and they're not around. But if you're younger, you can have less of a split of Bitcoin and Ethereum. I think we're both bullish on both of them in the near future. It'll be interesting to see if which one will have greater returns in the long run. But
and when we say younger, I mean we don't claim to tout to be financial advisors, but anyone would say, if you're even looking at your 401k, that if you're younger, you're able to take more risk because you're not geared up for retirement. You're not looking at making those long-term stable gains. You don't have to worry about losing a decent chunk of your money, so you could afford to be a little bit higher risk. And that's what any 401k allocation would be too. They pretty much determine your age, and you could essentially see if you're in these higher volatility, whether it be stocks and bonds or cryptocurrencies.
So there's a number of other different categories here that we have outlined: marketplaces, payment processors, supply chain management, decentralized exchanges, DEXs, which have been some of our larger interests. There's, of course, a smaller sector dedicated to niche use cases, marketplaces, some things that there's a number of cryptocurrencies that fall under those use cases that can make up those, other things, niche use case. You could classify a bunch of different things, but these are some of our biggest holdings, platforms, Bitcoin and Ethereum aside. Things like supply chain management, so that takes into account things like Walton, VeChain, Modem, decentralized exchanges, which are growing more popular, and even exchanges, I guess, in general, Binance, KuCoin, Kyber, and several others coming out, Robinhood, Costs, there's many others, and there will be many more. Payment processors, Utrust, Request Network. What are some of the other ones that we have?
OMG, of course.
OMG.
Metal, Monetha.
Metal.
So I think if you consider this as an investment, in a long-term strategy, the Bitcoin, Ethereum, there's other smaller cryptocurrencies such as Ripple and such like that. Like we hold Ripple as well. Don't get us wrong, we hold Stellar as well. And a lot of those cryptocurrencies and in general, I think they're good. I think there's a lot of them are going to be weaned out almost a little bit, but a majority of our portfolios are in platforms, and you could rebalance this however you want. I mean, if you like Dogecoin and you really believe in Dogecoin, don't let anyone tell you stop. Maybe make sure you do your research.
Or Digibyte.
Or anything like that. Make sure you do your research. But it's good to take a healthy amount of risk. I mean, you're in this space very, very early. You're obviously here to make money. You're not here to just play around with tickers and hey, I invested in this thing called Dog or Doge or Cat. You're obviously here, serious investor, but it is good to take a decent amount of risk. But at a certain point of risk, you're essentially gambling, because we can't predict the future. We don't know what's going to happen, so it is important to allocate your portfolio appropriately.
And I guess the final slide is portfolio rebalancing. And to give you an example, there's a lot of cryptocurrencies that we invested in very early on that had risen greater than what we expected. And you're going to want to rebalance at that stage. And for example, investing at NEO or Ant shares around $1, NEO grew to a much larger percentage of my portfolio than anticipated, at times outweighing, I think, what Bitcoin and Ethereum was a part of my portfolio. So I had sold some off,
right,
and I've sold more as it's continued to grow and become a larger percentage of portfolio.
But that's the beauty of it. When for example, when we exited a portion of our NEO, we got into things like GVT at under $3. Genesis Vision, which is another cryptocurrency that we're pretty strong on. Things like supply chain management coins like VeChain. That profit, that's why we always say everyone should hold a little bit of Bitcoin and Ethereum. When we're taking profit into Bitcoin and Ethereum, and that enables you to quickly enter into other positions without really thinking about, hey, what do I sell to enter into another position? So portfolio rebalancing is really a key integral part of, I think, cryptocurrency investing as a whole.
And there's a lot of opportunities too. I think in down markets like the one we're experiencing, this is being recorded in January of 2018. And if you are in a downtrend like this, it's good to reanalyze what cryptocurrencies you are in to see if there's anything you should cut out that doesn't make sense, that you got into preemptively, or conversely, things that you like that did well and are doing well, and things that you may want to add more of. Of course, we like to get into something, watch it, see if it grows, and then see if it makes sense to keep investing. Is it going to be the next Bitcoin or Ethereum? Like, is it going to be the next NEO? And do we want to buy more, or is it going to be something, less substantial, and maybe we cut losses altogether or reorganize? And I think it's a great time to do in a bear market when things may or may not bounce back as well as you expected, because as time goes on, a lot of these cryptocurrencies will die off or will suffer as things start to work, compete with each other, come online. There may not be a need for 18 different types of Bitcoin. So that metaphor could be applied to many other things. So take the opportunity in bear trends and down markets to read up more on what you've invested in, and then be considerate of when positions in your portfolio grow to, sizes that you did not expect, and you can look to take profit or purchase other cryptocurrencies that are emerging.
Absolutely. And, there's obviously an emotional factor and a psychological factor, really. We always say, don't trade when you're bored, or don't get emotionally invested into a single cryptocurrency, because it will come back to bite you. I think the end goal for all of us is to essentially make more money, right? Essentially grow our portfolios with what we have right now, and staying vigilant and staying educated and researched. Keeping track of your portfolio. I think these are all very, very, very integral parts of becoming a successful investor.
So I think that's the end of it. So thank you guys. Of course, if you have any questions that you want to ask us more directly, you can feel free to message us in the Slack and Moon Lounge, and we're happy to answer them. So we'll continue to do these webinars. We'll probably have one in a couple weeks where it's live and you guys can interact and ask questions to us on a more personal level. This was to kind of catch you up as to what our portfolios look like, especially if you're new to cryptocurrency, and we hope you enjoyed it.
See ya.
Thank you.